Okay, so one of the first questions is how can we leverage what we've learned from these courses on FinTech to the outside world? Well, the same could be said for anything that you learn in any course. How do you leverage that? I would say you do have an advantage here in that FinTech is clearly useful and applicable. Companies are aware of it, they're interested. If you're working in the finance industry, this is something that can help credibility or help you think about issues within your institution. And companies are very interested in having their employees learn more about FinTech, learn more about technology in general. For example, we had a recruiter from Standard Chartered Bank here at HKUST that asked, the question was asked from undergraduates, what do I need to do to work for Standard Chartered? The head of HR said, it would help if you knew R and Python. And you might want to know something about finance. So, in other words, learn tech because we need to hire tech. And one of the things the banking industry is also noticing is that the number of people getting laid off is increasing and the number of people hired is increasing, but the average age is going down. So there's a shift towards more tech skills. If you are older and you don't want to be part of the outsourcing or layoff redundancy part of that, you might want to have some other skills and be perceived as one of the pioneers and innovators and early learners. So it can help you keep your job. It can help you find a job. It can help you think differently about your job and about opportunities, risks, or challenges. So it can help you in a number of ways in leveraging that. How would this certificate help me in my job search? Well, companies less and less care about degrees. A degree is kind of a minimum criteria of are you worth even talking to or hiring. So a degree matters, but they care more what you know. And so sometimes you can use certificates like a Coursera certificate to say, I know more than just a generic degree. I have some skills in addition to my degree or instead of my degree. So it can help you build your credibility, is that you have both interest and some. How will internet banking change the ecology of the banking industry? Well, we've already talked about regulations being similar. And so one of the things you may say is, I don't see a big change. But what we are seeing is that it does make a big change in how banks act. Just think about HSBC today and ask how good would HSBC be if they didn't have internet checking or if they didn't have ATMs, which is a really old technology, but still technology that changes banking. And you can't do without these things. Now, what is happening is that banks are getting good at this stuff. And so what I would say is if the change happens fast, like Alipay and WePay did in China, that is going to disrupt industry practices. That's going to be a transformative deal. And it's very hard to put that genie back in the bottle. Alibaba, the genie is out, the change is made, you're done. But if the changes happen slow, the large financial institutions will be able to respond. What's the prospects for FinTech in Hong Kong? It's huge. I think a lot of it will happen within large banks. I think a lot of it will happen with an existing firm. Some of it will happen with non-bank lenders. Some of the non-bank services are being offered by banks, like PayMe is a subsidiary of Hong Kong Bank. It's not a bank, it's a payment service, it's an app, but it is now owned by a bank. And so we'll see more things being intertwined with banking, but I think we're going to see more apps, more services, more FinTech, and more opportunities. Some will be virtual banks, some will be traditional banks, some will be non-bank services. How's the government going to impact things? Well, we see increasing government actions, and you've seen in cryptocurrencies that government can have a huge damper on the market. It can make it harder to do virtual banking. Some banks, some non-bank services in the US had to curtail parts of their operations or develop partnerships with banks in order to comply with regulations. In particular, I think the efforts to stamp out underground currencies or terrorist financing, which is probably an excuse, because governments really want to tax things. And you call terrorism financing or crime financing a reason that we need to be able to tax things better. But they're putting dampers on things. Like in the crypto market, not only have they said an ICO is a security, but they've also said if you're an exchange, we're going to tax every sale as 100% capital gains unless you can show where that cryptocurrency was purchased and what you got. So this is like any other security. You have to report when it's sold now. That results in taxation.
Governments love taxation.
They do love taxation. How do AI and machine learning influence FinTech? This is less obvious, but the AI and machine learning have key drivers behind and underlying many different FinTech innovations. Without AI and machine learning, WeBank would probably not exist because their amount of their average loan is small, their approval time is fast. They're basically an AI-enabled virtual branchless bank in China that is creating a whole new host of virtual banking services. They are micro lenders essentially, or
you can
small
borrow
lenders.
as little as 500 RMB, which is
like $50 US.
It's not much.
So 50, 60 US dollars is a very typical loan amount for them. And most banks would look at that and say,
that's not worth our time at all.
Our fee for the loan would be higher than that. So what are you talking about? We can't even begin to talk in this level. And WeBank says, sure, we'll loan you 500 renminbi. We'll loan you 60 US dollars to finance your receivables or something you need as a short-term need. And so they're financing a lot of small businesses that they've said, we are serving the unbankable. We're serving the unbanked. We're serving a whole new sector. Now, what this is enabling is new types of development. If you go back to an early pioneer of AI in FinTech, that was Capital One in the US. You know, you may think of Capital One, a huge credit card company in America. It is one of the largest money-centered banks in the world now. But it started out as a FinTech company. It started out with AI facilitating a new way of doing lending. So that's about it. We're going to finish up in a few minutes. Let's look at more questions. From the cryptocurrency slides, I'm wondering why would somebody choose to use the cryptocurrency for payment for transfer in other currencies, other than using an app for digital payment? Well, that's a good question. A cryptocurrency really is not a very good currency. You could think of it more like a security. It is a great way of transferring a moderately high amount of money to a very high amount of money. So you would use it for payments of 1,000 US dollars. You would not use it to buy a Diet Coke from a vending machine.
Yeah. I mean, you could buy a pizza with it, but
the fees would kill you.
Yeah. Depending on which cryptocurrency you're using, some of
them have smaller, but
some of them have smaller fees, but
for Bitcoin, for sure, it would be prohibitive. So it's not a very good coin. It's more like gold in that sense, in that it's a pretty good transfer value. And unlike sending things through a bank wire, you have a lot less fees than bank to bank with currency transfers and conversions would charge you. Are there other ways to do that with apps? Yes. There are apps that will allow you to send currency from one country to another. But right now, one of the richest, most expensive ways of doing banking is between countries with currency conversion and transfer. Banks make a lot of money on that still. And that's good for banks. It's bad for people who are using those kinds of services. In particular, small amounts of transfers, relatively small, like a Filipino domestic helper's payment going back home, a lot of that gets eaten up in fees, sometimes more than 10% loss of the total transaction, which is huge.
Yep. Western Union is
Western Union, huge fees and huge loss in there for the people using it. Crypto, not as convenient, but there are crypto ATMs. There are abilities to get money out in local currencies. You can go to Macau and go to a crypto ATM. You can put your cryptocurrency in China, go to Macau, take it out, gamble, put it back in, and not have to deal with taking currency across the border.
I think we have time for maybe one or two more questions.
Go ahead.
So this one is, how can we make sure that, so talk about fintech startups, how can we make sure that they would keep our data safe and not do something like Facebook? So we're dealing with data privacy issues.
Tough question. The odds are you probably won't be able to make sure that they're safe. And the odds are this is a serious risk. My guess is the person asking this is probably older than 25 because young people don't seem to care that much about this issue. Older people do. And so that's going to be a barrier. But for most people jumping onto any kind of phone app, they're more concerned about convenience than they are about security. Right or wrong, they're going to jump on, you're going to lose them. And this is sort of the same question I heard 20 years ago when people looked at online banking. And they said, how can we be sure we'll be secure? How can we be sure the data will be safe? How can we be sure our account won't be hacked? Well, you know what? Banks get hacked all the time. Data gets stolen from Marriott. Data gets stolen from MGM Studios. Data gets stolen from the U.S. government. So if you want to make sure your new FinTech app is safe, well, Target's not safe. The U.S. government's not safe. Major corporations and institutions have been hacked. Major banks have been hacked. Some of these FinTech firms are going to be hacked as well. So that is an issue. But there's no easy answer to that. Okay, I think that's about it because we're going to run out of time here. But thank you for coming and participating in our first podcast webinar on FinTech.
Yep, thanks.
Okay, signing off.
Signing off. See ya.